Hey guys, before I start this video, I just want to say a huge thank you for the love and support you guys have given me recently. So this video is gonna be about mitigation and order flow. You guys will learn the similarities between those two and the difference, the different between those two as well, right? So the example I'll be going through is my Euro USD. So I have been trading the 1 minute chart a lot recently due to my schedule. So um in a way this is a kind of a review journal of my trade and then showing you guys the mitigation and order flow, the difference between them. So I hope you guys understand. If you guys have any questions, feel free to drop in the comments below. I'll try to help as much as many of you guys as I can. With that being said, I hope you guys enjoy.
What's up, guys? Good morning, good afternoon, good evening, traders. Wherever you are in the world, welcome back to my channel. I am really thankful. Before I start, I am really thankful for all the love and support you guys have given me. If you can see here, this is my channel. We are currently at 239 subscribers, and it's always growing every day, and I really appreciate it. You can see that I have gained over like 500%, and my view count just skyrocketed. So even though the average views, I know some of you guys still a little 6%, like 17%, but I just want to say those who watched all the videos from start to the end, I really appreciate it. Yeah. If you guys have not followed, let me see. Here is my journal. I just finished this trading week. So yeah, I just finished this trading week. I started on 9th. Here is my journal where I post trades and stuff. You can see this is November 4th, so this was last week. So I started back on November 9th because I was really busy here. I plus 5 hour with the screenshot, and then this like my daily analysis, and then here you can see the day after 10th of November, the whole daily analysis with the trades I take. Yeah, so today I took 3 losses, which we'll go into that a little bit later. But yeah, overall it's plus 11. All is inside this journal if you want to see, so be sure to follow, link in description. I'm not gonna do any more sellouts. Yeah, so today we're gonna talk about, the topic we're gonna talk about is mitigation and order flow, right? So before I start, I want you guys to ask yourself, what is mitigation, right? Or what is order flow? Like in your head, what is order flow, what is mitigation, right? If you guys don't know, it's perfectly fine. So as I go through, as I continue, hopefully you guys understand a little better. I may not be correct, but this is just my perspective of order flow and mitigation, right? So before I start, let's go to white area. Okay, before I start, mitigation, right? So we're gonna go into the very basic fundamentals of the word mitigation. So as you guys don't get confused, mitigation and order flow, okay, simple as that. Those are, I would say, in my words, those are very similar terms and stuff. They're very similar, right? So where is my path? Sorry, where is my path? I think it's here, right? So if you guys know supply and demand, right, the one that has been gone through a lot of times, like I trade supply demand, order blocks, whatever you guys want to call it, smart money concept, they are the same, right? Supply and demand, they are just basic supply demand. So what is mitigation, right? Mitigation, right? If you guys haven't watched my breakout structure video, please go and watch. If you guys have any questions about it, comments, I'll put in the comments, I'll try to answer them, right? So here, breakout structure, we have a breakout structure, and then we have another breakout structure. Simple market order flow. If you guys don't know how to count or how to see what is breakout structure, go to my video somewhere around like the top right hand corner, I'll put it there. So mitigation, if you guys know or understand, oops, what did I do? Sorry, I screw up, damn. Okay, I'm back. Okay, so if you guys know mitigation or supply and demand, right? So okay, this is a very bad example. So basically, right, if you can see from here, this is a demand zone. Okay, we can see price come back and respected the demand zone before pushing up higher, right? So we see a demand zone, we see price come back in and push up higher. So what is the process? So what is mitigation, right? Mitigation, if you look it up, I think is the process of eliminating something, right? So if you think in terms of the bank, right? Let me just write it down. The process of eliminating something. So in this case, it is the orders, the bank orders, right? So in this case, it is the process of eliminating orders, right? So the banks want to close their orders. That's why it's mitigation, right? So if we were to put it in our basic supply and demand or order blocks concept, smart money concept, right? Mitigation is where you see price came out, the area or like the candle or the point of interest, that engulfing candle that caused the break in market structure. Okay, why? Because that is where the banks okay, I want you guys to hear it, open your ears big, all right? So why do I look for the place that the bank, the candle that caused the break of structure? Because that is where the banks have their order before an impulsive move up. Okay, if that makes sense, right? So you want to find the area or like the candle that caused the break of structure. The candle can be here, the candle can be here, it doesn't matter, right? The candle can be here, that can be on candle here. So like say price came back down, pull back, break of structure. This could be the area, and then what we would normally see, price come back to mitigate the order before going higher. The process of eliminating orders, right? So we're not going to go into like which zones to draw, which areas to look out for at the moment, right? So basic is just, in simpler terms, it's just the process of eliminating orders. Simple as that. That is mitigation, right? This is why banks have to come back, because say there are a bunch of liquidity around here, the banks have to place their sell orders. I'm pretty sure most of you know this, but just for like theory's sake, the banks have to place their sell orders here before they can place a buy order to bring the pricing higher. And then eventually we'll see price come back so that the banks can close their orders. And this is the process of mitigation, the process of eliminating orders. Okay, so this is mitigation. Okay, so mitigation, what we're gonna see is price come back, mitigates and goes higher, close their orders and go higher. Simple as that. That is mitigation. In simple terms, it's just mitigation. It's just price going back to their supply and demand zone. Simple as that. Okay, now next, order flow. What is order flow? Order flow is I would say order flow is, there is, okay, to be fair, there is nothing different from order flow and mitigation, right? That is the main topic of this video. What is the difference? There is no main difference. I'm just going to tell you the answer. There is no difference in mitigation and order flow. They are the same. Why did I say they are the same, right? Yes, they are in different terms. It's just different way of saying it. I can't zoom in. Okay, so order flow, right? What can we see from here? Okay, I'm just gonna move everything here. Okay, right. So order flow. This is order flow. What kind of order flow is this? This is a bullish order flow, right? As simple as that. And if you see something like this, what kind of order flow is this? This is a bearish order flow, right? So if you know that this is a bearish order flow, this is a bullish order flow. Sorry, I need to stop doing that. Okay, the bearish order flow, bullish order flow. Now, how do we know that they are the same, right? For order flow to be confirmed, there needs to be mitigation. Okay, for order flow to be confirmed, there needs to be a mitigation. Okay, so this is why I put those two words in the same video, because it is really important. I hope you guys don't get mixed up between order flow and mitigation, right? So why do I say order flow, you need mitigation to occur, right? Because this is a bullish order flow. For price to go higher, right, we know that price always impulse, retrace, impulse, retrace, impulse, retrace, and impulse. This is order flow, okay? And for price to be able to retrace, to go higher, there needs to be a reason. And what reason is that? The reason is that there is a demand zone, or there is an order block, or there is a leftover orders that the banks want to close. This is why price came back. This is why price pushed higher. So what is order flow? Order flow is just the process of mitigation. And what is mitigation? Mitigation is the process of eliminating orders. So are they the same? Yeah, they are the same, right? So this is the process of mitigation. Sorry, I'm just going to put all in capitals. Mitigation. Mitigation. The process of mitigation. Right? So what is order flow? Order flow is the process of mitigation, right? Because for an order flow to be for there to be an order flow, sorry, my words doesn't make sense right now. So for order flow to be confirmed, yes, there needs to be mitigation, because there is no way that price is going to keep on doing like this and just keep on shooting the sky, right? Eventually price will have to retrace. And why do they retrace? They retrace so that they can mitigate their orders. All right, as simple as that. Order flow is the process of mitigation. Mitigation is the process of eliminating orders. That's why price came back. And then when price pushed higher, there you go, order flow is bullish. Order flow is confirmed because price came back, respected to go higher. Simple as that, right? Okay, I hope I'm not confusing you guys. So now this is my backtest chart. We're gonna move on to a live chart. So this is a live chart. I think this is today price action here. Okay, so this is gonna be like a review journal or something like that. Yeah, I'm just gonna pause there so the candle doesn't keep moving. Okay, so this is what happened today in the 1 minute chart. I have been trading the 1 minute chart a lot recently because I have been really busy with school stuff, but yeah, I've been trading 1 minute chart a lot, so it really helps me in just taking a few minutes off to take trades and stuff. Okay, basically, okay, what is order flow, right? So in this 1 minute chart, okay, it works in 1 hour, 15 minutes, 5 minutes, 1 second. It works everywhere, right? Price is fractal, so just because I'm doing it on 1 minute doesn't mean it applies only on 1 minute, right? So here, okay, there are quite a few examples that we can see. So here, okay, let me get my marker. Okay, so here, what can you see? Price is bullish. Okay, is there mitigation? Yeah, there is mitigation. Take a look at this candle, right? This candle caused a break of structure here. What caused a break? This caused a break. That's why price came back to push higher. Simple as that. Caused another break of structure, right? We will not all the time. Oh my god, I can't speak English. We will never 100% get a mitigation, right? We will never 100% get a mitigation, right? Because price can mitigate orders today, the banks can mitigate orders tomorrow, they can do whatever they want. So we will not expect, or we will not see a mitigation right after, right? So here you can see price reacted off to this order block nicely. Then we left this order, and which eventually is not being mitigated, right? So here you can see, let me just draw it out like this, and then eventually, right, it did not mitigate on the way down, right? It only mitigates when price came back down. So here you can see price push in, there is a bullish candle. What is that? The process of mitigation. Alright, so if you think about it, if the banks place an order sell and then they place another order buy, so they have their sell orders here, right? Does it make sense? So for them to close their sell orders, it will be converted into a buy order, and that is where we see a reaction. This is the process of mitigation, right? This is the process of mitigation. Price dig deeper, another bullish candle, process of mitigation, until there are no orders left. That's why price is able to go lower, right? Because the process of mitigation is completed, or like the banks have no interest in pushing price higher. That's why they close their orders here, and that is why we see reaction here, go lower, reaction here, and break lower. Alright, if that makes sense. Okay, so I hope this is not too confusing for you guys. So here you can see there is always a reaction, right? There is always a reaction. It's just whether it is big or it is small, right? So here, okay, price pushed in, go higher. Do we get mitigation? No, we don't. But if we were to draw this out, just look left. Do we get a reaction? Yes, we get a reaction here, right? We get a reaction, but it is not strong enough. Why? Why is it not strong enough? Because we can see, okay, the reason why this area did not hold, yes, there is a reaction. Yes, the banks closed their order, right? Allegedly closed their order, or I can't 100% confirm that the banks closed their order. We will never 100% know, right? But we can use our eyes to see what is happening here, right? So we know that this is a bullish order block, right, or a demand zone, right? So we know that the bank's orders are here. Price came back in, reacted. This is mitigation, but the bank's intention is not to bring pricing higher. Why? Because they have a breakout structure here. If the bank's intention is to bring the pricing higher, why would they want to break this area? Why would they want to break this? And this is also why there is a breakout structure. Because if order flow is bullish, okay, let me just redraw this. If order flow is bullish, why should price want to break it down? It doesn't make sense, right? If the banks have their orders here, they would never want their price to be negative. They would never want their price to, their orders to be in drawdown. It doesn't make sense that price breaks down just to go higher. Yes, this can be a liquidity grab, and this could be easily reacted off to. But what you can see here is price breakdown. Okay, we see here, all right, this is a demand zone. Okay, then what do you see afterwards, right? We don't see a reaction here, right? Do we see a reaction? No, we don't. We see the candle close down, right? Simple as that. Okay, from here, right, where is the wick? I think the wick is below here. I think I marked this wrong, but it is too, okay, it's a little hard. Let me just mark this down here, lock this, close this, close this. Okay, so here, all right, so we can see it's bullish, market is bullish here, right? Up to this point is bullish, and then what can we see right afterwards? Price came down. If this is correct, this should hold, but in fact we see a candle here, right? We see a candle come down here. Next candle, it came down. It did not even react to here, right? If you react, it should be something like this and wick up, right? So here you can see price already closed below, right? Here you can see it closes below. Now what can we say? It closes below, it wicked below. Now we can say that price, there is a change in character, there is a change in order flow. Price is ready to reverse, right? So we see price came down, price closed below, wick down here, bullish candle up, right? So it came, it does something like this, came down, it wick up. Why did it wick up? Because there are stop losses over here. There are stop losses over here, right? People who trade um, supply and demand just like that of the 1 minute chart, they have their orders here. They have their orders here. And if they're buy orders, right, if they place a buy here and their stop losses over here and they get stopped out, what did their buy orders turn into? It turned into a sell order, right? Makes sense? So here you can see price came down, came back up, it wicked. Take a look at this nasty wick, right? It wicked all the way down, take all of their stop losses, and it pushed back up. It pushed back up to close the candle here, right? It pushed back up to go down, right? So stop losses are being taken. So now what can we see here? Okay, if you go into the second chart, you can see price do something like this: came down, came up, came down, and then this wick is where price came up to mitigate it and go down. You can simply take a trade off here. Simple as that, right? So I'll just draw this. I'll just bring this to one side. Okay, I'll just bring this to one side. Okay, now I will move price to somewhere around here. Okay, we're gonna go down to like the 15 seconds. Okay, now what can you see? Price came up, down, up, break of structure, move pricing higher, break of structure, mitigation. Simple as that. This could be your entry. Okay, is this the same as what I draw? All right, you take a look. Okay, if I were to move this back here, is this the same as what I drawn? All right, so okay, maybe this is not as nice. Price came down here, came up, mitigate, and go down. Right, is this the same? Right, we have the first break of structure, we have the retracement, we have the second break of structure, and we have a mitigation, right? Okay, and this is also where your mitigation comes in, right? So if you rewind back to our very first few minutes, I can't remember where, I talked about the area that caused the break of structure, and that is very important. The area that caused the break of structure. Why? Because that is the area that banks place their orders to move pricing lower. Okay, so now in this just in this price action, right, we can see price came up, down, up, and break of structure. Now you ask yourself, what caused the break of structure here? What caused the first break? Where, right? We see this bullish candle. Do you see a wick here? Do you see any long suspicious wicks? There's no long suspicious wicks. Where? Here, right? This wick, if I were to go into lower time frame, it would be a candle that comes down here, closes above, and come down, right? This is your supply zone, or like some traders would like to call it the hidden base. If you guys don't know what are hidden bases are just supply and demand, your drop base drop, your rally base rally, simple as that. Or like your Wyckoff or something like that, like your redistribution. Wyckoff redistribution is your drop base drop, simple as that. Or like your hidden base, like there are a lot of terms for it, right? So don't even get me started. Like if I were to put the candle put like a replay candle here, I go into lower time frame, we can really see a supply zone here, right? So we talked about what caused the break of structure, the supply zone here, and that is why price came back up to mitigate the orders. This is the process of mitigation to cause another break of structure. And now where did it cause the break? This is where I'll say that causes the break. Oops. This is where I'll say causes the break, right? Makes sense, because this bullish candle came back down, caused the break of structure here. Then we have the process of mitigation to go lower. Okay, break structure here, came back up to mitigate the orders here, go down, break structure. What can we see? Mitigation. And then right afterwards, we can also confirm that price will go down from here. Sorry, I need to stop. Okay, right? If that makes sense, right? So now here you can see mitigation, 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 break of structure, mitigation. Now all of this mitigation, what did we just form? We form a bearish order flow. We form bearish order flow. Make sense? Order flow is the process of mitigation. Right, so this is order flow. Okay, make sense? Okay, so now we are talking about, okay, let me just remove all of my brush because it is a little messy. Okay, now let's go back up to the 1 minute. So on the 1 minute you can't see anything, right? So it's okay. We're not gonna do anything from here. Okay, let me just remove all of this. So here we can see a reaction for like any zone that you draw, right? You will see a reaction. Oh, what is that? Okay, now as we go candle by candle, okay, what do we see from here? Okay, this is where I spotted, why is my thing here like this? Okay, I think this should be above, but it's okay. From here, what can we see? We see a change in character. Means the market is bullish now. Bullish order flow, right? We have a bearish 30 seconds order flow, but now what can we see? We see bullish order flow. Why? Because if price were to be correct, this supply zone should not be invalidated. This market structure should not be invalidated, right? So now we see the first change in character. So now we know that price is in a demand market right now, a demand market, so we can look for buys. Okay, and then from here we have a first change in character, so we see supply zone fail, and then we see demand zone start to hold, like this demand zone, I think, right? Oops, we see demand zone starts to hold. Okay, we go candle by candle, right? So if you have it like this, and then make sure your stop loss are slightly below, because this is the 1 minute chart, right? Make sure it's slightly below, you would have been tagged in here. Okay, then you place the buy up. Okay, so now to be safe, okay, we go, okay, next. Now we see another breakout structure. Do we get a mitigation? No, we don't, right? We don't always get a mitigation, right? So now from here, right, so this is where I see a shift in demand market, a shift in supply market. So now we are in a demand market, so now demand zones are being respected, right? So supply failed, okay, price came out, changing character, breakout structure, came back down, caused another breakout structure. Simply I just put my order here. So this is my first trade. I think this is just like how I review my trades now in terms of talking to mitigation and order flow, right? So here we see price came back in to do what? Mitigate the orders. Makes sense, right? Mitigation, this is mitigation now, right? So mitigation is what's going to cause order flow, right? I don't think there's a lot for me to talk on because it's just really simple, but here you can see price mitigates the order, and what happens afterwards? It goes higher. Simple as that, right? It goes higher. Now we are in a supply. We hit a 1 minute supply. This 1 minute supply is the extreme, which took liquidity here. There's liquidity here, right? Liquidity above each high and low, right? Liquidity that caused a breakout structure here, right? When I was in this trade, I should have been aware of this, but yeah, I could have like hedged a position here, so hedge and then break even. That would be a nice. I would have been a nicer position, but instead, what I did was I placed my stop losses here. Why? Because if I know I'm correct, we should never see price violate it. We should never see price came back down. Why? It mitigates the order here, means there are no more orders to be closed. Why? Because price came back in, it caused another breakout structure. Simple as that, right? If it caused another breakout structure, you can simply assume that this is being used, right? Like the banks closed that order. Like the banks would never, right, came back, mitigate their order, go higher, and then break another structure, and then came back down to mitigate again to go higher, right? Yes, it will happen. This will be in the form of liquidity. It will happen, but this is not how. And then this would be a point where I got stopped out break even. Simple as that, right? So yeah, let me just close this out. So here you can see that it breaks structure here. So we have bullish order flow now, right? We have bullish order flow. Bullish order flow, right? Break of structure, bullish order flow. So if this is correct, this zone should hold, and then it should cause another break of structure, right? So I have my stop losses here, if I'm correct, to cover a little bit of like the commission and stuff, right? So if this is correct, we should not see price violate it, okay? And then fair enough, price stopped me out, and this is where my first break even came in. So now eventually price will violate it, right? So imagine if you didn't break even this, you have your stop losses here at the same point. You would have been taken out at a -1. Would you rather be stopped out at a loss, or would you rather be stopped out at a break even? So now this is where trade management comes in, and I'm not here to talk about trade management, right? So simple as that, right? So if you understand mitigation, you will know when to break even your trades and where to put your stop losses. Simple as that. Okay, and then we move from here. Okay, so now we have a mitigation. This is your order flow, bullish order flow. We have your second 30-second bearish order flow. Now if I were to go into lower time frame, this would be a bearish order flow, right? But I'm just going to stick to here. Okay, we are talking about mitigation and order flow. I'm trying so hard not to get off topic. But okay, here, okay, okay, so from here, what can we see? I see the mitigation of the supply zone. Okay, so if I were to zoom out, right, we see the mitigation of a supply zone. What can we see? Is bearish order flow now, right? Because this is mitigation of like this zone here. Simple as that, right? Price came back down, break structure, down, mitigate, and what can we see? I'm expecting a bearish movement. If that makes sense, right? You take a look at this. This supply zone. If I were to draw the supply zone, it tapped in nicely around here, right? So now, if I look left, there's bearish order flow. Makes sense. Makes sense for price to be reacting off here and reacting off here. Now, what's next? So now I know reaction off here. We caused the break of structure. We took liquidity. We took like major structure here, some structural swing point. And what caused the break of structure? Here, this caused the break of structure, right? And like I said, always find the cause of the break of structure, because that is where the banks will have to close their orders. So here we can see, this is what caused the break of structure. This last buy to sell candle. Then from here, I spot liquidity. So this is your liquidity, which make this a very high probability setup. We see price wicked in, tap me in, and then we see price start to go lower. Then we see little pullback, and then took liquidity, break of structure. That is where I move my stop losses here. I move my stop loss to be here, right? Because if this is correct, if bearish order flow would be correct, this would be the last point of mitigation to go lower. We should not see price violating here. We should not see price going above here to go lower, because it doesn't make sense. Mitigation doesn't make sense, right? So from here, in terms of order flow, we see price came down, mitigate the orders here, right? What can we see? We see a little pullback, price break another structure here. Final area, supply. What caused the break? Always ask yourself, what caused the break? If this caused the break, this will be the supply to go lower. So to better manage my trade, I think my stop losses could be placed here better, right? And not here. Okay, if that makes sense, right? So I know it's a little messy, right? I'm gonna redraw that again. Price came back up, down, mitigate orders here, break of structure. What caused the break? This caused the break. We should see mitigation to go lower. We should not see a violation of here. So that's why my stop loss is here. Okay, simple as that. So now, fair enough. Once I break even, or once I see this nice order flow, bearish order flow, I break even my trades. Okay, I almost hit take profit. This really almost hit take profit. It was like 0.2 pips to take profit. What the hell? Okay, now I am at. Okay, from here to take profit, it is 0.2 to take profit. Yeah, I got stopped out break even. I got stopped out break even. So this was like, oh, I think I know why. Because I have it 5.07R. I'm supposed to have it 5R. If I were to have it 5R, is this a take profit? No, this wouldn't have been a take profit either. Let me just measure this. It will be a 0.1 pip to stop loss. 0.1 pip to take profit. Oh my goodness. Maybe spread would have given me take profit here or something. I don't know. But yeah. Anyway, don't be greedy. I put it at 0.5.07 to cover a little bit of commission. So yeah. So here you can see price just did not react and go higher, right? So don't be greedy. Learn from my mistake, don't be greedy. So here you can see. So as we were talking about mitigation, right? If this is correct, we should see price reacting off here to go lower, and it should not be here. Then fair enough, price came back up and it stopped me at break even. We see a shift in character, changing character. Then right afterwards we see it wicked below liquidity, and then we got a break of structure higher. Now order flow is bullish. Now from here, I was away from the chart after having my stop loss to break even. I was away from the chart, so I wasn't looking at this. So what can we see from here? Price came down, right? Took liquidity, break of structure, shift in character. What caused the break? This caused the break, right? This is the extreme that caused the break. Okay, you ask yourself, where did the break of structure come from? All right, and I'm talking about this break of structure. I'm not talking about this, right? If I'm talking about this structure point, this would be the break of structure. But in this case, I'm talking about the recent one. Why? Because I'm going to repeat myself. You're going to hear me to repeat myself over and over again, because it is the same thing. It is very simple, right? Price came back down, break structure lower, supply zone here, mitigation. All right, what caused the break? This caused the break. That's why price reacted off here. We can have another break of structure. What caused the break? This caused the break. So if this is correct, we should see price going lower. But in this case, we don't. We see price came back up. So now we have a violation of bearish order flow. This is also a change in character, right? A violation in bearish order flow. Now, from here, we have a first break. So now, where did this break come from? Simple as that. Is there a candle here? No. Is there a candle here? Yes. So now where is the demand zone? This is demand zone. You can simply take a trade off here. Yes, you can just take a trade off here, like simple as that, right? Like I'm not even noticing this right now until I am like reflecting on my actions, reflecting on like the trades I've taken today, and then my minimum take profit, my minimum stop loss would be 1.5. like my minimum, you can see 1.5 here, you can see 2 pip here, you can see 1.5. my minimum would be 1.5, and this would have tagged me in. And if I put the 5R, this would have tagged me in. Changing character, came back down, mitigate it, and go higher, because we have a violation of structure here. If this is correct, we should not see price break above the zone here. Okay, I know I'm repeating myself a lot because I want to drill this into you guys' head. Demand zone here, right? We have the violation of supply zone. We have the violation of the bearish market. So now from here, once this is broken, we can look for buys. Simple as that, right? I'm going to remove this because I did not take this trade. So here is a good area. Now from here, I'm not sure how long the video is though. This is currently 38 minutes. Okay, I will talk a little bit more and then I'm going to end. Like there are still a lot of trades to go, but it's okay. It's okay. If you guys want to review it, you guys can go to my Telegram. It's all here, so you guys can see for yourself, right? Basically they are the same. Mitigation, order flow, they are the same. It's the process of mitigating, right? So here you can see supply zone here. This supply zone caused a break of structure here, took liquidity, caused break of structure here. Obviously there will be a reaction. So what do we see? We wicked above and then it started heading lower, right? There is a reaction. There will always be a reaction, right? Then I couldn't quite remember what happened. There is a demand zone here that did not cause the break. All right, there's demand zone here. Okay, there's demand zone. Price respected it, built liquidity, and then caused the break of structure. Okay, simple as that. And then Do we have mitigation? Okay, I'm trying to find a place with nice mitigation. There's no mitigation here, right? There's nothing. Why did I take this trade? I took this trade because there's liquidity here, caused breakout structure, and then took this trade off here. Let's find mitigation because we're talking about mitigation. Let's see. Okay, we took liquidity, we shift in character because supply zone, the demand zone, sorry, should hold here, but it did not. It didn't hold, right? So it failed, all right? So I took, it failed, so I should actually be looking for sells from here onwards, to be fair. But in my eyes, we see a reaction of this zone here. We see a pullback. I took this as a mitigation though, to be fair, to go higher, and that is when my ideal bullish order flow came in. Makes me want to take it makes me want to take this trade. And then here you can see a reaction, and then unfortunately I got stopped out here. Then we see price goes higher, it does its thing, it's fine. I'll let it do its thing, and then we see another breakout structure here. Okay, simple as that. Breakout structure, mitigation here. What caused the break? This caused the break this last week. Okay, you guys can see this last week caused the break. So I took my entry here, and then we see violation, right? We see a little bit of reaction, and then we see a violation to this area, to this original extreme. All of this become liquidity, and this is the demand zone that failed. This is the supply zone that take out the demand zone. Then we have a reaction off here, and then it goes lower, right? Okay, so here there are quite a few zones that I marked out because this is a very nice order flow, bearish order flow with mitigation, right? What can you see? Price came back out, break structure, mitigation, break structure. What caused the mitigation? What caused the break of structure? Here, that's why there's a mitigation. Go lower. Now, what caused the break of structure? To be fair, I will mark my zone here, to be fair. But in theory, it's always the last bullish candle. This is the last bullish candle, right? So technically, this would be the whole area. And there is a mitigation to go lower. But I like to refine it to here though. So it will be a really preference. This would be a preference kind of thing. So if you are like me, who like to take like the refined zone, you will miss it. But if you like to take like the whole zone just to be safe, you will have been tagged in, right? Then from here we see, and so say assume this is a mitigation. Okay, we have a mitigation here, and then mitigation break structure. Now what caused the break? This one caused the break, so we should see a mitigation here. I'm not sure if it reacts off to it. We see price steps in, all right, price steps in, and then mitigation, and then they go lower, they break structure lower. I'm not too sure. Okay, and then it went higher. So here you can see that bearish order flow was confirmed. Simple as that. Eventually, because okay, the thing about mitigation is what we want to see. I know we are going a little bit too far, but this is very important. What we want to see is a few mitigation before the full release. This is really important. Mitigation before the full release. What we don't want to see is mitigation, 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 mitigation. Why? Because this will be your trendline liquidity for price to be taken out instantly. For price to be taken out instantly like this, and then shifting characters, supply market, and then you look for sales now. Right? So this is what happened here exactly, right? We see mitigation, 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 mitigation. This is your trendline liquidity now, right? And then here you can see, right? Here you can see we have a breakout structure here, right? In the 30 seconds time frame, you can see it's a breakout structure. Let's go to the 30 seconds, right? Candle closure. Okay, there's no breakout structure. Sorry, I was wrong. Right. Anyway, in the lower time frame, right, these are all minor mitigations. You can trade the minor. It's up to you. You can trade the minor zone if you want. So we can see minor mitigation. So we see price came back down, mitigation, and then the full release. right? These are the minor structure, right? If I have time, I'll show you like the major mitigation before the full release, but here are the minor mitigation before the full release, and then taking out all of this liquidity. I think it even went higher. I think let's see, yeah, you went higher and then take all of this liquidity out. It even break out the high here, yeah, so it came back up to it take liquidity. So as I was recording this video, so I think I X this out, yeah, it's somewhere, price is somewhere around here. So it's out of my trading hours now. It is Friday, it is late, and yeah, I think this video is a little too long. Where is it? Sorry, I pressed the wrong one. This is at 45 minutes now, so I think my Discord is gonna on because I pressed the wrong one. Okay, so I hope you guys enjoyed this video. I hope you guys find it informative. If you guys hold my Discord, sorry. Okay, I hope you guys find this informative. I hope you guys learned something. Mitigation, order flow. To keep it simple, I'm just gonna close all of this because this is gonna make my PC make it so laggy. Okay, where is my okay, I think I lost it, but anyway, mitigation and order flow, right? Mitigation, okay, I'm just going to do a quick sum up. Okay, mitigation is just the process of closing orders, simple as that. Order flow is the process of mitigation, which is the same thing. And this is your order flow, right? Simple as that. Bearish order flow, bullish order flow, simple as that. So they are the same. Order flow or mitigation, they are the same, right? So if you understand the theory and like why price should not violate it, then you guys will know where to put your stop losses, right? Like, so if you guys are still confused, go back and rewatch this over and over again. Yeah, watch it over and over again. If you guys still have questions, put it in the comments below, or you guys can just message me on Instagram. Or like just leave a comment here. I'm friendly. I reply to all the comments, right? I reply to every single comment here. Yeah, I think that's all from my side. This video is a little too long, 46 minutes now. So I hope you guys find this informative. I hope you guys learned something. If you guys have any questions, or if you guys have any video suggestions, please put it in the comments below, or like if you guys need help in anything, just put it in the comments below, or just text me, right? Then I'll make a video about it, because if I just want to try to help you guys, right? So trading shouldn't be hard, it should be simple. So I hope you guys learned something. Yeah, I think I've talked a lot. I don't think I have anything else to say. So if you guys haven't subscribed, please subscribe. I know a lot of you subscribers, wait, no, let's go to audience. Subscribers, here there's like 80% of you not subscribed. Why? Right, like 80% of you guys not subscribed. So if you guys are watching and you're not subscribed, please hit the subscribe. It's free. I'll continue to do content, or like if you guys are amazed with like the things I say, or you guys are interested, or you guys want to find out more, hit subscribe. And yeah, I think I'll stop talking now. I have talked for like a little too long. Yeah, okay, I'll stop now. Goodbye, and I will see you. I hope you guys trade safe. It is Friday. Hope you guys have a nice weekend. Trade safe next week, right? I'll see you guys when I see you. Bye bye.